And yet the markets managed to stage a V-shaped recovery. Yep, it was a symmetric recovery. Now, it is something we talked about in past videos, that when you have a waterfall decline, almost every waterfall decline has a symmetric V-shaped recovery. But there's 5 reasons for this, and these are not in any particular order, but this is why I think markets recovered so quickly. I think investors made a few mistakes. And as you can see, every time the VIX spiked, everyone is forced to de-risk. Well, guess what? When VIX starts to calm down, people re-risk, and that causes a rise in stocks. I think the S&P is going to make its way to all-time highs and probably go higher.
Despite the chaos, markets staged a V-shaped recovery, a symmetrical bounce that, as Tom Lee notes, is common following dramatic sell-offs. He lists 5 core reasons why investors were wrong to panic and why markets rebounded quickly.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
For the week of May 9th, Granny Shots gained 0.66%, both on price at NAV. The S&P was down 0.45% for relative outperformance of 108 basis points. Year to date, Granny Shots is outperforming the S&P 500 by 252 basis points. But what's notable is the dip here you could see in the months of February and March of relative underperformance. That's because of a Black Swan event that occurred in markets. And it's actually not this Black Swan, but it's the Black Swan as referred to by Nassim Taleb. In 2025, there were 3 things that contributed to this Black Swan. The first was the drug tariffs announced on China to Canada and Mexico. The second one was the DeepSeek and the sort of disruption and fears that this would really undermine US AI efforts. And the third was, of course, Tariff Liberation Day on April 2nd. What all this contributed to was a waterfall decline in the S&P 500. And in fact, it was such a significant decline that the Black Swan hedge fund, which is actually the lead scientific advisor there is Nassim Taleb, gained 100%. And the last time this Black Swan hedge fund had strong performance was COVID. So we know there was a Black Swan event. And yet the markets managed to stage a V-shaped recovery. Yeah, it was a symmetric recovery. Now, it is something we talked about in past videos, that when you have a waterfall decline, almost every waterfall decline has a symmetric V-shaped recovery. But there's 5 reasons for this, and these are not in any particular order, but this is why I think markets recovered so quickly. I think investors made a few mistakes. The first was they were betting on the end of US exceptionalism, that their view was with DeepSeek and the tariff wars, that the rest of the world would start to be a better place to invest. But keep in mind, if you look at the 25 largest stocks in the world, 21 are US companies, only 4 are non-US. And here's the question. Do we really think that the tariff wars, maybe monetary policy, are enough to unseat the US center of innovation? That's not our view. The second is many thought the US was going to slip into a recession, so they sold US stocks. But as you know, we've talked about this, the high yield market did not confirm that. The high yield market, as you can see here, this is spreads, have been rallying. In fact, at the peak, high yield spreads only got to 461 basis points wide to treasuries. Here's some perspective. If you look at the last 15 years, high yield spreads have gotten even wider than that. And only one of them led to a recession, which was the COVID period. And that was 1,000 basis points wide. And even when the Fed was doing the fastest rate cycles in history, the widest it ever got was to 599 wide. And again, that's why we did not say there was a recession risk, because that's not really a recession level widening. And in the post-Tariff Liberation Day carnage, spreads only got to 461 wide. In fact, as you know, many economists have now canceled their recession call. Like, for instance, JP Morgan just this past week said there's no more recession risk. The third is that people said the supply chain was going to take a hit, so they want to short US stocks. Well, you know, we've talked about this too, that look, let's say container bookings are taking the shape. These are ships leaving from China to the US, and they collapsed. But they're going to recover now that we have some tariff visibility. Markets are going to ignore that because that's a speed bump that works its way through the supply chain, similar to a government shutdown. And in fact, even though that's our view, hedge funds were shorting cyclicals and small caps, and they continue to short them even this past week. Well, guess what? Container bookings have exploded. So now that we have the tariff wars behind us, things are recovering. The fourth is that the VIX surged, and that forces institutions to de-risk. The top chart here is the VIX, and the bottom chart is speculative positioning that's non-commercial. Okay, that means, in other words, risk on. And as you can see, every time the VIX spiked, everyone is forced to de-risk. Well, guess what? When VIX starts to calm down, people re-risk, and that causes a rise in stocks. And lastly, and I congratulate this, retail investors were buying this dip, but hedge funds typically short what retail does. So you basically had retail buying while hedge funds were shorting retail actions. But guess what? Retail got it right. And of course, ultimately, this is a reminder, and we've said this before, there is a Trump put out there, and investors just forgot it. A lot of people said the Trump put didn't exist, but that's not true. So where does this lead us? I think the S&P is going to make its way to all-time highs and probably go higher. We cover that at FS Insight, our service for investors to follow our views. But again, we do think at least making it to the all-time highs is very likely.
Tom ends the video by reminding viewers what a granny shot is, named after the unconventional basketball free throw style used by Rick Barry, who made over 90% of his shots. In investing terms, a granny shot is a stock that doesn't just dominate in one theme. It appears in multiple strategic themes like...
And that gets us back to the granny shot. So granny shots suffered during this Black Swan period, but as you can see, in April and May has begun to recover. In fact, it gained 771 basis points relative to the S&P since May 9th. And therefore, it leads us to our quarterly rebalance. So we are rebalancing granny shots after a Black Swan event. So let's talk about style tilt. Well, it turns out we still want to stick with the same two style tilts, growth cyclicals and growth quality. But in terms of seasonality, these are the 8 most attractive groups over the next 3 months. Tech hardware, software, interactive media, beverages, broadline retails, healthcare providers, healthcare equipment supplies, and tobacco. Although I got to tell you, healthcare I think is a little dangerous, so we might want to de-emphasize the seasonality there. That means we have a couple deletions. We are deleting Accenture and Qualcomm due to this quarterly rebalance, but we're adding 5 stocks, so we have a net 3 gain. So let's go over these stocks. The first is FICO. Now, if you're not familiar with FICO, this is the price history over the past 6 months. It's a very good-looking price gain, and it's led by William Lansing as the CEO. But in short, FICO is a central player in the growing need for quality information security. They do a lot of things in fintech, but of course we know them for their ratings and credit ratings for individuals. The second is GE Aerospace. And this is an old line company. It's being added because of style tilt. And Larry Culp has been the CEO for 7 years. But I think the best way to think of it is GE is going to be a central player in the growing need for quality sovereign border security. And we talk about energy and cybersecurity. This is, again, an important player because they make a lot of things that the US wants to build here. The third is Robinhood. And as you can see, Robinhood is really qualifying because it's now part of style tilt. And it has been in the millennial list. But the reason we can finally add it as a granny shot is that it was added to the FTSE All World Index, which is a major index, on March 22nd. So it didn't meet eligibility criteria previous to this. Robinhood, of course, has been a very good performing stock. As you can see, this is year to date, led by its founder. But the simple way to think of Robinhood is that it's the millennial blue chip financial services company. I don't want to say it's the Goldman Sachs, maybe it's the Morgan Stanley, maybe it's the JP Morgan, but it is really the blue chip company because they're doing all things for millennials. The fourth is KLA-10 Core. Now, KLA-10 Core is a semiconductor company. They have a longtime CEO, Rick Wallace. But the way to think of it is KLA is a key player in the AI future. And again, it meets eligibility criteria because of the style tilt that we're making. And the last one is Monster Beverage. You've all heard of this company, hopefully. It has a co-CEO who's been there for 35 years. It's been one of the best performing stocks in the S&P 500 really for the last 20 years. But the best way to think of this is that it's the leading functional drink for millennials. So that's it in a nutshell. Those are the 5 inclusions. Now, if you're wondering, what is a granny shot? It refers to a way of an unconventional basketball free throw style popularized by Rick Barry, who made 90% of his shots. As you can see, the typical overhand free throw shots don't have the same win percentage. The way we implement granny shots in your investment portfolio is we look at some critical long-term themes like millennial strategy, global labor suppliers, energy and cybersecurity, and easing financial conditions. And we have tactical portfolios like style tilt, seasonality, and PMI recoveries. But to be a granny shot, you can't just be the strongest stock in one of these 7 themes. You actually have to appear in more than one theme. That's why it's called a granny shot. And the more themes you appear in, the more you are a granny shot. For instance, these are the stocks that appear in the most grannies, or the granniest of the granny shots, which is Google and Meta.
So there you have it, a full breakdown of Tom Lee's expert analysis on the market's recent turbulence, the hidden strength behind the V-shaped recovery, and how his granny shots portfolio is poised to outperform in the months ahead. As always, Tom backs up his views with solid macro reasoning, tactical sector calls, and a long-term conviction in American innovation and retail resilience. If you're an investor looking to understand where markets are heading and how to position your portfolio, this update offers critical guidance. Please like and subscribe.